Hi everyone, let's go over my low time frame and micro bullish and bearish Elliott Wave scenarios on Bitcoin. Starting with my low time frame bearish scenario, where we are looking for a finished expanding flat where wave C should be a 5-wave structure, which then is already finished, hitting the most common target area for wave C, which is between the two 1.618s, meaning that the invalidation for this scenario is if price would move above the 30k high over here, because after this scenario you expect continuation to the downside and this high preferably not to be hit. Also, preferably you will see price moving to the downside in an impulsive structure to look for much lower prices. If we go to the low time frame bullish scenario, we are looking at this low over here to be the low for at least a 3-wave structure in an ABC or an impulsive structure in a 1, 2, 3, 4, 5 for then much higher prices. In this scenario, if this is the low over here for an ABC, we're looking for a 5, a 3 and then another 5-wave move to the upside in a zigzag structure, where then this zigzag structure in an ABC, the purple count, is part of a WXY bigger scenario. So we have a 3-wave in W, 3-wave in X, and then we would be looking for a 3-wave structure in wave Y, which then is a zigzag structure. In this scenario, you then expect a bounce somewhere around this area. Currently, price is finding support over here around this order block. We also have the 0.5 Fibonacci, which is taken from the low over here to the high of wave 1 or wave A, and we also have a daily over here which has been tested now at 29.230, so that's quite nice. And if this support wouldn't hold, then I would be looking for the 786 level, which is quite interesting as well, because we have a daily naked point of control over there at 28,875. So we then look at least for a continuation to the upside, and only after this high is broken I will look for targets towards the upside, because we don't yet know if the low over here is in, and the low is important to then estimate the targets for a wave 3 as well as a wave C. If we go to the lower time frames towards the micro, then from the low in a little bit more detail, we are looking at an impulsive structure with an extended wave 5 over here, which is a bit more rare, because usually in an impulsive structure, wave 3 is the longest, biggest, most impulsive wave out of wave 1, 3 or wave 5. However, in this scenario, wave 5 is the strongest wave, which then is also represented by the volume in this move to the upside. But what is nice about this fifth wave is that the highest volume is over here in these candles. Then we have a bit of a range, and then the next push towards the upside was on lower volume, and that is what you want to see in a 5-wave count in a 1, 2, 3, 4, 5 inside of the bigger wave 5. Now in this scenario, we also see that this wave 3 did not hit the 1-to-1, and that is important because the 1-to-1 is taken from the low to the high of 1 to the low of 2, and this wave 3 in an impulsive structure is not allowed to be shorter than wave 1 and wave 5, but as you can see it is. However, it is on the Bybit and on the Coinbase chart. It is not on a couple of other charts like Binance, for example. However, I'm not sure if I like it that this wave 3 is shorter than 1 and 5 on my personal chart, but at least on some other charts it is good to know that price did reach the 1-to-1 over here. Now if we look at the structure here towards the downside, we can see as we are recording price falling towards the downside, falling towards the daily naked point of control. The daily naked point of control for me is kind of like the last support for price. If this does not hold, then we are expecting lower prices. At the moment, this structure is quite difficult to count. It's not easy to say if this is an impulsive structure to the downside or a corrective structure. And actually what I wanted to say at the end of this video and the probabilities as well is to have a look at the volume and observe what is happening in case price would move to the downside or to the upside. So yeah, we will see how this is of course playing out as we speak. I wanted to talk about the daily, offering at least some nice support for at least a couple of hours over here, is now broken, and if the video is online, we'll see if the daily naked point of control can hold price or cannot hold price. It's quite funny that we actually have this during the recording. Lucky me. Okay, so in this particular scenario, this is the bearish scenario. We are looking for impulsive structures towards the downside. So in this scenario, we're looking at this to be a wave C, right? And then a bigger three-wave structure in an ABC expanding flat. And now we want to see continuation to the downside in an impulsive structure. We want to see volume increasing, and we want to see impulsivity and also like a structure like this increasing towards the downside. In this scenario, we did not really have a clear bounce for a wave 2, which is quite interesting. So we had a little bit of a bounce over here, but it didn't reach the 382. But also this high over here, if you take a fib from the high to the low of this first structure, let's say to the downside, then over here the 382 has not been hit. And if we think about a wave 2, a minimum target, most commonly at least, a minimum target for a wave 2 is the 382, and the most common targets for a wave 2 is between the 0.5 and the 0.786, which clearly has not been hit so far with any of the retracements that we had towards the upside. All of the retracements have been very, very shallow. Therefore, one could say it increases the probabilities for at least another move towards the upside, because for a wave 2, what you actually want to see is at least a retracement to the 0.382, because anything lower than the 382 is very rare. If we also look at this structure over here on the 5-minute, which is something I don't really like to do, I like to stick on the 15 preferably, but it is not that easy to count impulsive structures to the downside over here. While price was moving to the downside, you could say over here we have a 1, 2, 3, 4 and then a wave 5, but this structure at the end looks a bit like a 3-wave structure, so not too sure about this being impulsive. But of course we wait and see what happens over here. And also the CVD divergences for me are very important. What I just want to say with this scenario is that so far for a potential wave 2, we did not, at least at any of the retracements, hit the 0.382, which is already a rare target by itself for an impulsive structure to the downside. If we then look at the CVD divergences, we have been building bearish CVD divergences constantly. With every bounce that we got towards the upside, bearish CVD divergences were building. Over here we had bearish CVD, locally a bit of bearish CVD, then price continued to the upside, and again bearish CVD divergences. Now constantly these have been playing out, and now this one over here also played out with this push towards the downside. Now it is quite interesting to at least have a look now at the CVD and see what's actually up. So we have at least a bit of structure to the upside, price moving to the downside, so all of the bearish CVD divergences have already played out now. And currently, as you can see, while price is continuing to move to the downside on very high volume here, you can see bullish CVD divergences, higher low on price at the moment, lower low on the blue line. However, what is very important is that the volume of this move to the downside over here is much higher than the volume at the low, which then automatically means I don't like it, right? So I don't really like bullish CVD divergences when the drop towards the downside or the candles towards the downside have higher amount of volume than the low that's been generated. So at the moment, it's not that interesting, and we have to also wait and see how this candle, of course, is going to close. It almost hit the daily naked point of control now. And if we then finally go into the probabilities of the different scenarios, then mainly because of the structure over here, which does not look impulsive towards the downside for the reasons I explained in the video, the low time frame as well as the micro is still bullish. Now, considering the low time frame over here, you can see the text below, the move to the downside over here so far looks corrective, and you would expect a bounce towards the upside that at least is going to hit the 382. And then depending on the bounce that we get to the upside, either a 3-wave structure or a 5-wave structure, we can then assess probabilities to continuation, or a 3-wave structure for then continuation to the downside. And on the micro, what is important is that the, of course, bearish CVDs have been repeating all the time. So is the daily naked point of control a target? Absolutely. It just missed the daily naked point of control at the moment at 28,875, but that is the final support for price. And if we then move towards the downside, or basically what we already did, we have to observe the reaction and then assess the probabilities based on what we see more locally, because besides Elliott waves, I do use other technical analysis in my trading for potential entries. Also important, keep an eye on the CVD. I always talk about CVD. Now more locally, we do have bullish CVD as explained. It is a high volume candle, but maybe price can range a bit, move to the upside, create a bit of a structure, retracement, and more locally local CVD divergences, that would be an ideal scenario instead of trying to catch a potential knife. But nonetheless, the probabilities based on this structure over here are towards the bullish side, and we have to now wait and observe what price is going to look and do over here. So keep an eye on the local CVD divergences and the volume for potential continuation, and keep that daily naked point of control in your mind. I hope this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use in my opinion, which is the CVD. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.